with technical analysis and what we call the outer limits of technical analysis. Let's talk about technical analysis for a minute. I'm sure many of you have thought about it and continue to think about it. What technical analysis is doing and has been doing for the whole, ever since really the beginning, whenever technical analysis actually got started, the real import of it was that technical analysis was looking at markets to try to discover something that would repeat. Would you agree with that? That essentially technical analysis is looking for something to repeat. Something happened in the past, some price movement, some pattern of some kind, and technical analysis in one way or another has been looking for the markets to repeat that behavior in the future at some point. And what we as traders have wanted to do is take advantage of the repeat, the fact that something could be known to repeat. You know, every day the sun comes up, we're used to that. Every day we go to work, we drive in traffic, and so on. And so we know that things repeat, and we're using technical analysis to discover how those things are going to repeat. Strangely, though, after having been in the markets now, I'm in my 27th year, and I think I'm in my 27th year with CQG, because I started in May of 1990 with them. Strangely, it's been my discovery that nothing repeats in the markets. And I want to give you a few analogies, and this is just for you to think about, and I'd be very interested in hearing if you have questions or comments, you can type them in. I'll be very happy to answer them. So the original premise of technical analysis is that things are going to repeat. Something is going to repeat in the future. And we want to trade that repeat. And as I was saying, what I've discovered is that what happens today or happened today in the markets never ever happened before, and nor is it ever going to happen ever again. So that whatever we trade today is actually a unique imprint, if you will. It's not something that we could have looked to the past to say that here is what's going to happen today. It's kind of analogous to you and I driving to work in traffic. We're going to see traffic every day. We know that the road is going to be there. That repeats. Our car is going to be there. That repeats. But the nature of traffic is different every day. Traffic is there. That repeats. But the nature of the traffic, the where, the when, the how of all those cars, the trucks, the buses, and so on, that never repeats. It's never exactly the same, or nor is even nearly the same. Ted, who came to work at 6 a.m. this morning, he's a little bit early. His car goes zipping by, but tomorrow it won't be the same because he'll be going to work at the normal time, and it's always different. So it might bother you some that here is somebody telling you that nothing repeats in the market. I hope it doesn't. I hope it puts you into a thoughtful mode about the fact that we've all been looking at technical analysis one way, which is that something should repeat, and we want to trade that repeat. But it has been my experience and it's been my discovery, and I can actually show it and demonstrate it and prove it, that not only does nothing repeat, but whatever happens today has to be solved like a puzzle for today. In order to know what the market's going to do, we have to solve a set of conditions to know what the most likely thing the market is going to do is. And by going that route, by actually not looking for something to repeat, but instead looking for how it's going to happen differently today than it has ever happened before, I found a small doorway to really, really big rooms that allow us to say with a very, very great amount of specificity exactly what should happen under a given set of conditions in the market. So for today, the first premise I want you to think about and go home with is that we all took it for granted that technical analysis had to do with looking for and trading something that repeats. And instead of that, the counter idea is that nothing actually repeats ever, and what does repeat aren't the things that are most important. The things that are really important are the things that don't repeat, and that's today's action. Let me give you another analogy, because these analogies are easy to understand, and I'm sure you understand the point, but let me give it to you in another way. Let's take something terrible in the history of America, Adolf Hitler. Here's a man who had a mustache, had his little outfit, and he was in a position of power to do a lot of damage, a lot of terrible things to a lot of people. And people would say, the person could say, well, you know, everything repeats, you know, history repeats, and so at some day in the future we're going to have another Adolf Hitler. And they don't mean literally Adolf Hitler, but they mean another set of conditions, something like that. Now, you and I both know there's not going to be another Adolf Hitler. That whole set of conditions is not going to repeat. But would you agree with me that there is something that is going to repeat? When people say that history repeats, they mean something else other than the exact thing that happened. So what could we say? We've made the point that nothing actually repeats, you know, pattern-wise in the market precisely. What does repeat? Well, I'll tell you. The patterns don't necessarily repeat. We're not going to get another Adolf Hitler, but the energy that produced an Adolf Hitler is going to repeat. The energy can't be created or destroyed. It simply gets transformed. That's a very basic principle. And that transformation of that energy means that it is, in fact, still here, and it is going to come back, but it's going to express itself differently. So one way of using that analogy is to say what has happened in the past in the market, that specific thing is not ever going to repeat. But the energy that produced that does repeat. The thing that repeats is not the manifestation itself, but the energy prior to the manifestation, the energy behind the manifestation. That does repeat, and how it's going to repeat is the solving of technical analysis. Now, I've got charts up here, and these are just the most recent, some recent charts that, including today. As a matter of fact, let's just take a quick moment here. I want to show you a trade that we were initially incorrect about. We shorted the market on the S&P 2459 on the 18th, and we were indeed stopped out at 2463, and that stop out told us, through solving the set of conditions that existed, that the market could be bought at 63, which we did right here, and the forecast for 63 was to occur in the third 30-minute period. In other words, in the first 90 minutes, or in the third 30-minute period, that the price of 2463 would come again, and that the market could be bought there for an advance to 2468 to 69, and then the final target of 2473.74. Now, this was given out to hundreds and hundreds of people, and indeed, the market did rally up initially to 2468.69 and then 74.75. Today's high is 75.25. Now, this piece of movement has never happened before in the S&P. The specific thing that you're looking at here, the expression, this movement from here to here, never has happened, and it will never, ever happen again. But what we're tracking, and what we believe, what the title of this seminar that has to do with the outer limits of technical analysis, is that the energy that produced this move itself does repeat. And so instead of trying to hope that some pattern in the future is going to repeat like it did in the past, what we're doing is saying that never repeats really, but what does repeat is the energy itself that produces patterns. And if we can track that energy, then we can say with a great deal of specificity that a very specific thing is going to happen under the very specific conditions, the one-time only conditions that existed yesterday in the market. We never expect to trade this move again, and we never will. Not because of our desire to or not to, but because it will never happen. this way again. So instead of looking for things to repeat, we're looking for how to solve the set of conditions by tracking energy that indeed does repeat. So the thing that repeats in markets is the energy that produces moves, not the specific pattern of those moves. I hope that distinction isn't lost upon you, and I know I'm throwing a lot of this at you right now, and many of you will understand what I'm saying here. So we're coming from a very different point because we're looking at, like I said, for something other than patterns to repeat, and we are able to put that together in the form of a very specific forecast for what's going to happen. Let's take a look as an example here in the center. This is the S&P Monday, July 17th of this week. 2459, which is a price, 2460, is shorting territory for a decline to 52 to 51 into tomorrow, Tuesday, July 18th. Now, why would this move have to go down into the next day? And the answer is because the energy that's going to produce a movement down is going to repeat tomorrow. That's why. So we're not using a cycle analysis like from when a low happened in the past, and nor do you need to in your trading, although you may be doing that now. A further advancement on that is we don't need to track the pattern. We just have to track the energy. And the energy itself doesn't have to have made a low in the past. It could have easily been a high. It's the energy itself that's going to repeat. And there's a way to determine its polarity, meaning that whether the market's going to advance or decline. So, you know, I've given you a lot right here already, but you can see that the very next day, very early in the session, the market made a low of 2448, and that completed the 2452 to 51 downside indication for the market to decline to. And it did so right when a theoretical bit of energy was to hit the market. Now, how that pattern would play out, I mean, the precise pattern, we wouldn't know because it's a confluence of many, many things, many bits of energy that are coming together at a certain point in time. And it would be very, very complex to work that out. It wouldn't be necessary. But what we can say is we can say that there is a certain amount of energy, and that amount of energy can be literally converted into how much price movement would occur once that energy hits the market. And that, therefore, is why the market went down to complete 2452 to 51. Now, if an indicator existed that could measure that theoretical energy, that would be great, but there isn't one, nor do I think there ever will actually be an indicator that can do that. It's possible much, much later. I never want to say anything's impossible, but the manner in which you track this energy, it would be difficult to program that into an individual indicator. You know, most of you know this, but the markets are as big as life. They're not just a little confined space in the universe. They're just as big as life. If you look at everything in life, all of the diversity, you know, a plant, a building, people, animals, all of this, planets, all this vast diversity, the market, in a sense, could be said to be expressing all of that diversity in only 3 movements, up, down, and sideways. So the market is, in a sense, as big as life, even though it doesn't have all of the varied expressions of life. It's expressing it in all of these movements back and forth. All of that variance is there. So I think it's a really good idea to seriously take a look and realize that perhaps unknowingly you've been looking at technical work as a means of finding something to repeat, when in actuality the market isn't going to repeat itself, but the energy that produces moves, which can't be created and can't be destroyed, is going to repeat. And our work, what we do here, and we're here today telling you about it so that you can think about this, because it's a lot different than thinking about ordinary technical analysis. Now, a couple other points here that I'd like to make, and I know we only have limited time here. I'm already 15 minutes into it, many of the possibilities that you have in your trading will occur when you begin to think differently about what you're doing. You can certainly trade any way that you feel comfortable with and so on. What we're doing is we're trying to wait for the point in time where energy from the past is going to repeat and how it's going to express itself in today's set of conditions. I want to show you a trade that we did just a short while ago in gold over here on the left-hand side. It's shown on a 4-hour chart. Don't worry about that. But the trade was for gold to close daily above 1208, and it would then advance to two targets, one 1224.25 and then 1231. Now, far from being targets that are based on a resistance level or a fib level or something like that, these numbers represent the conversion of energy that's going to hit the market into price movement. And that price movement brings us to these various levels. So instead of measuring the market or measuring a move, so to speak, what we're really doing is, again, measuring the energy and saying this is how much energy is going to get expressed right at this point. And if the market closed above 1208 on the day, and this happens to be shown on a 4-hour chart, so I think 2 or 3 of these is one day, and it did close above it, it closed at 1213.70, that would tell us that the earliest proof that that theoretical energy was coming into the market was there. And indeed, the market rallied to 1225 and then right here 1232.70. So this is I know this is new to you, and I want to take some questions. There's much more to this than what we're talking about now, but I want to maybe say a few other things that might be important to you to think about, because this is sort of an introduction to the things that we're working with. Let's take, for an example, this chart in the center here. This is a high printed on your chart, and we all, it's really just normal. We all look at that high and say, okay, well, there it is. That was in soybeans. That was $10.16, and from there the market declined. So we view this high, unknowingly or maybe even unconsciously, we view it as a fixed thing. There it is on your chart. It's fixed. But it has been my discovery that in reality, this is a picture. And because it's a picture, we tend to think of it as fixed. But this high and this whole, if you were thinking of this as resistance, this high is actually fluctuating. The picture doesn't fluctuate, but the force behind this is fluctuating. And if we know about that fluctuation, we can know when the market is able to move through a resistance level, because it's not resistance when it's fluctuating. When it goes to its null, it's no longer here. Even though it's on your chart printed there, in reality, it's not. Everything is fluctuating. You know, there's nothing. If I said to you, please bring me something, go outside into that field over there and bring me something that isn't fluctuating. I mean, you could bring a penny to me, but we know that the atoms and everything else in there are fluctuating. Everything is fluctuating. So anything printed on your chart, even though it looks like it's fixed in a place, it actually behind the scenes is a fluctuating phenomena. And we take advantage of that so that we can know when a market can break through a level. In this particular trade here, we were saying that you could sell short at 10.15 on soybeans for a decline to 9.98 to 9.97. Now, the market indeed went straight down to 9.96.40. How could that be known in advance without some very sophisticated or some kind of magic indicator or something? It's not magic. It's simply that on this set, under these sets of conditions that existed, a previous force in the past, the market as forces at work, was set to repeat. And we could determine, and so can you, that that force would be, the polarity would be negative for a period of time. And that the amount of force present would push this specific market to this specific price. As bizarre as that sounds, it's the absolute truth. That's how we forecast that the soybean market would be going down to 9.97, and it would do so from 10.16. Now, the market could go back up to 10.16 and go right through it and never do this again, and it never will do it again. It's like a crime scene where you determine the facts and you're able to solve the subsequent most likely thing that's going to happen. And that's what we're doing here at PageTrader. And I would love, Allison, I know you're there, and we're running a little bit over, but if there are any questions, I'd be very happy to answer them, and please read them to me if there are.
Okay, great. We do have one question, and someone did ask if you could talk a little bit more about quantifiable energy.
Well, it's a little difficult since I have about 8 minutes left to really tell you how it works here, but I hope to be back on another time with you to go into more detail about the nature of this discovery, that we shouldn't be looking for something to repeat except for the energy itself that produces the moves in the past. That energy is not going to repeat the same pattern, but it's going to repeat, and through understanding the current set of conditions that the market's in, you can make a very, very specific forecast for what the market is about to do, and it's astonishing to watch it happen in real time. That's the business that we're in. Now, I didn't come up with this overnight. I started in the same way that everybody does. I started with all of the indicators and many bits of excellent work that is in the CQG platform. By the way, I don't want to be gratuitous here, but there's no better platform on the market in any country, including, obviously the United States, than the CQG platform. There are many factors I could go into, and I don't have the time now, that CQG has solved that other platforms don't. And those things can make a big difference as to whether or not you are able to see something that's there clearly and not miss it. Can I give you one example before we take any other question? Let's take the clock. Have you ever thought about the clock on your platform? It's vastly more important than you probably think. You see, many platforms, inferior ones, will give you to do something arbitrary, like as an example, I won't name one, but when the S&P opens at 8:30 Central Time and it trades for the first 30 minutes, that first 30 minutes brings the clock to 9 o'clock Central Time. And that particular platform will say, well, we like the hours going from 9 to 10 to 11 to 12, and then finally to the close. That's arbitrary. That means that the first 30 minutes of that platform's price bar is going to be 30 minutes, but they're calling it an hour. That's the first hour of the day on the platform. But it isn't an hour. It's 30 minutes. Well, if as soon as you get into this kind of work with energy, that throws the entire thing off. So it's very possible that you are currently using, I hope not, and it is usually adjustable in these platforms, it's very possible that you're using a platform that calls the first 30 minutes of the S&P an hour. And if that's the case, nothing that I'm showing you here would ever work, even if you knew how to do it. There's a number of other things that are, and CQG doesn't do that. There's a great number of other things that are very important, and maybe in another time we can also talk about platforms, and to make sure that this is your microscope to see the markets. And we want to make sure that the microscope is seeing it correctly and that there's no distortion that's changing what we see. Now, real quick, since we do have a few minutes here, the question was about sort of the nature of the energy. Everything requires energy to move. I had to come up with a saying for the markets for myself. What are these markets? What's the most basic thing we could say about markets? And for me, that statement was, markets are forces at work. And forces is the energy. The work is pushing price up and down through time. Now, understand this, I don't want to get too complicated here. If there really was no time, then obviously everything would happen at once, right? The move would happen instantaneously. But because there is time, any force that wants to push price higher or lower is going to have to kind of burn through time. It takes energy to move through time. If you just sat still for the entire day, you still are going to be tired at the end of the day and have to go to sleep. It does require energy just to be moving through time. So any calculation, if you will, of the kind that we're showing you here with the markets of where they're going to go and when they're going to get there, that calculation has to include the fact that some of the energy that would be converted to price movement is going to be burned off by the passage of time. So obviously to understand the energy and the things that we're talking about, the energy that repeats, not the pattern and so on, we have to also understand how energy expresses itself through time. And one of those understandings is that time burns off some of that energy. So when we make a forecast like this, for just in this particular case for soybeans, we have to take into account that energy is going to be expended just by the passage of time. And so I hope that at least gives you something to think about as well. It's all very scientific, and we're all brought up to believe that the market is a bunch of people screaming and yelling, and it is, but the whole of all of those people screaming and yelling creates an energy field, and that field is under laws. It's just that simple. I could just as well say to you from my desk, hey, Ted, could you go out and just pick something up in the field across the street, something that isn't under any kind of law? Just bring it over to me, any kind of principle or law, just whatever it is. Well, you wouldn't be able to find anything if you picked up a twig. We know twigs have all kinds of science and laws to them, pennies, whatever it is. Whatever you bring me, everything in the universe is under law. And that includes even man-made things like stock indexes and markets. And the reason they're under law is because they have to do with energy and time. And as soon as you have those two components in there, bingo, you're under law. So when all these people are screaming and yelling and buying and selling all over the world, that creates an energy field, and that field has itself, by its mere existence, is under laws. If we can understand something about the nature of that energy, we can do some really amazing things. We, all of us, you and I, can do amazing things in the markets, and we can come at the market from a very different perspective, one that looks to solve a never to ever occur again set of conditions, and solve it today for today's market or for this week, whichever time frame you're looking at. And once that's solved, we understand we're not going to go look for that to repeat again. We're going to look to solve the next set of conditions. So listen, I hope, at the very least, I hope this has been interesting and some new information, something for you to think about. You're welcome to come to PageTrader.com and watch us utilize this outlook in the markets, which we do every day, and check out our history, which you can by going through thousands and thousands of forecasts that we make using this, and decide for yourself if this is something that you'd like to learn more about. I'd also like to say that I'm deeply appreciative to the people of CQG for having us here today. While we've been a customer of theirs for 27 years, I think this is our first time of actually coming on and talking about our work. I'd like to thank all of you and thank the staff here at PageTrader for helping us out with this today, and Allison, you for having us on. We hope we can be on again another time and go into some more detail about how all this works.
Yeah, of course. Well, I want to thank you for joining us today, and
thank you,
for
Allison.
Presenting. If anyone missed anything during today's webinar, you can view a recording on CQG's YouTube page, which will go up shortly. If you have any follow-up questions, though, in the meantime, please feel free to reach out to Mr. Williams or your CQG representative. Mr. Williams, do you have anything else?
No, I just want to say thanks again. I want to wish everyone the best to them in trading, and we'd hope to see you at some point. If you have more interest, come check us out, and we'd be very happy to show you more in real time with real markets.
Wonderful. Thank you so much, and thanks everyone for tuning in.
Thank you, Allison. Thank you, CQG. Thanks
Bye.
all. Bye-bye.